Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video here on Thursday, May 5th, about 20 minutes after market close, 4:19 p.m. Eastern time to be exact. And folks, it was a nasty, nasty day in the markets today. And the topic of this video is going to be, it's okay to be wrong. It's not okay to stay wrong. And so what we're going to do is we're going to talk about the trades that we made, what we did in Grotection over the course of the last 2 days, how we started to try and get in just a tiny bit yesterday with the really strong action, and then quickly cut the cord this morning as we saw this poor action starting to take place. So that's really going to be the focus, as well as highlighting some of the destruction we saw across all sectors in a variety of stocks. There really was nowhere to hide today. So let's get right into it. What just happened? Fed-induced rally, very short-lived. Stocks of all sectors crushed. So performance-wise, the high beta growth stuff taking it the worst, right? G6 down about 5, QQQ down about 5, the S&P down 3.5, Dow down about 3, mid caps down a little over 3.5, Russell 2000 down 4, 60/40 down about 2.5%, 2.33 to be exact, and Grow down about 0.6% on this day. So state-wise, no changes here, still in correction, and trend-wise, no changes there, all still in downtrend. No reason to change those. Today's action really confirms those. So we're going to move along quickly here. We're going to get into the tail of the tape. First, let me highlight Revere very quickly. If you have any questions about anything in this video, whether it's something I said, one of the trades we made, please send me an email, hunter@revereasset.com, or you can email anybody here, Dan, Tim, Don, or Merrill at revereasset.com as well. So we're going to move through the tail of the tape pretty quickly here, and this is the S&P on the right side. All of this remains the same. State is still correction. Headwinds remain the same. Put-call ratio creeping back up about kind of getting into that high range, but nothing really extraordinary. 1.12. We saw the VIX spike up pretty nicely today, up 24% to 31.61. Still hasn't taken out its recent highs over the course of the last 3 or 4 months, which are around like 36 to 38 range. Fear greed down a tiny bit, down 6 to 32. So we did reclaim 4,200 yesterday, lost it today. Bear case, rally failure, and break of reclaim moving average, as you saw on the trend gauge, that was confirmed on 422. News, we do have the jobs report tomorrow morning. That's something to be aware of. That could either cause a small rally or it could cause a gap down in the morning. So be aware of that. What were we watching today? What will we do into this resistance at 4,300, which is basically right where we closed yesterday, and support at 4,200. So we gapped down overnight from this 4,300 level, like I said, where we closed, and there was no buyers pretty much all day long. A bad break of 4,200 did not operate as support really whatsoever today. 50 SMA held. This is a list of stocks that we were tracking. As you can see, a decent bit of these did. Some of those today coming under pressure, but more than likely, a lot of these not acting so well. So we did see names like Lily hold up and that type of thing, but a lot of these coming under pressure as we move through the day here. Action-wise, opened down a little over 1%, pretty much immediately started trending down, brief consolidation, break to new intraday lows, and then we finished slightly off the lows, about 1% off the lows actually. S&P finished down 3.55. I would say at the lows, it was probably down about 4.5, 4.6. So finished 1% or so off the lows there in the last hour. Notes-wise, after hours yesterday, we closed right around 43.05. Overnight, we were down to about 42.59. So that's that 1.1% that we were talking about where we opened right here, closed down 3.5. G6 down 5, 60/40 down 2.33, Grow down 0.63. Sector-wise, the dollar up, but all sectors red and all sectors absolutely crushed, trading like growth stocks today. Sectors down 4, 5, 6, 7% today like it's nothing. You don't see that very often. Portfolio-wise, we're going to get into these trades here in just a second. We went from a beta of 0.44 to a beta of -0.1. So we bought a short position on the S&P. We sold our Dow exposure, sold Apple, sold Lilly, sold Exxon, sold Mosaic, and sold this commodity ETF as well for a small gain on this one. Nothing necessarily wrong with it. We're just reducing risk and selling something at the top of its range. Bottom line for today, massive expectation breaker, nowhere to hide. Staples, utilities, doesn't matter what type of area you were in, you felt the pain today as the broad market really was starting to sell off And more importantly, we saw some of those key stocks that have been holding up like Apple and like Tesla really get hit today and start to bust wide open. I think that might be the most important takeaway of today. So moving along here really quickly, the declining 50 is now at 43.73, the declining 21 now at 42.99. This was that prior close. And then today we close at 41.47. Same here, massive expectation breaker, nowhere to hide. Now you've just got these recent lows here as possible support, this 41.15 as possible support, but really not much working in your favor. Certainly feels like it's much more likely that these lows are broken given the action that we saw today and just the overall volatility we're seeing in the market in general. So let's go through the indices real quick, and then we're going to get right into the trades we made here at Growtection and at Revere. So S&P 500 got this big reversal yesterday, strong close to end the day up 3%. And this really gave rise to a lot of stocks starting to maybe shape up a little bit and look a little bit more encouraging. The first close really above the 8 on the S&P in about 2 weeks. So you had some positive things starting to happen here on the S&P, but it's just met with a nasty sell-off today. So up 3% yesterday, down 3.5% today. And this is not something that we're completely unfamiliar with. Up 2.5% here on the 28th, down 3.63% here on the 29th. This day here, we finish at the top of the range, even though we're not up that much, 0.6. The next day, we're down 2.8. So this is kind of a recurring theme. We're seeing extreme volatility here and just very poor price action in general as we kind of have consolidated all around this 4,200 level on the S&P. And as we move through the rest of these indices, you're going to see very similar action to what I just described. So the Q's down 5% today after being up 3.5% yesterday. Really, really poor action here. Much closer to taking out its lows, its recent lows. Actually, it did briefly undercut its March 2nd low, 309.65. Today's low, 309.62. So by 3 cents. But as you can see, this is very, very close to those lows, whereas the S&P's got a little bit more room. But nonetheless, the Q's, the NASDAQ, technology, growth continues to act worse than the broader markets. And by the broader markets, I mean the S&P, areas like the Dow. As you can see, DIA is not so close to those lows as you saw with the Qs, but same type of action here. Strong finish yesterday, right up over the 21, almost closing right on the 50 or slightly above it, just to get absolutely shut down and rejected today. MDY, kind of a similar story, got it back above the 21 for the first time in a while. Strong hammer candle, but just nasty, nasty action today. Right back down almost 4% today. What you're starting to see is you're seeing indices trade like growth stocks, and that is not necessarily what you want to see. That is not typically a sign of market health. It's a sign of the opposite. And IWM, last index here, down 4% as well. You can see same type of action, above the 8 for the first time in about 2 or 3 weeks, but just shut down really, really nasty like, and also within striking distance of the lows. But again, not undercutting the recent lows like you saw on the Qs. So the Qs, the ARKK, the G6 type of names, those are the areas that really had the worst types of days today. So we're going to go ahead and get right into the trades that we made. So first off, we're going to start with Apple. This is something that we bought yesterday on this really nice and strong bounce off the 200-day and reclaim of all of these key moving averages back above the 8, the 21, and the 50. But what I want to point out to you here is just because it looked good yesterday, and there's a decent bit that had candles like this where you're thinking, okay, we got back above some key levels of resistance, not saving you from the pain that was today. Apple has not had many down 5% days. Just in general, Apple's a relatively more stable stock, but Apple was down almost 7% at the lows today, back below the 200. This is certainly not constructive price action. We got out of Apple earlier this morning around 10:30, 11 or so. Exxon Mobil, another name that was actually looking pretty good this morning. Technically nothing necessarily wrong with it, but a pretty nasty reversal along with the market. Sold this today as well. It had a big move up yesterday. Looked like it was going to continue that this morning, even in the face of the market being weak, but ultimately came back in, was down about 3% at the lows today. A couple more here. Mosaic. This is one that also looked pretty promising, had a nice close yesterday, closed right on the 21, but really nasty action today, was down about 5% at the lows, undercut the 50. And this is recurring theme. Anything that had any types of inklings of relative strength this morning gave it up by the end of the day for sure. Moving through the last couple here, LLY sold this one as well, undercut the 21 and the 8, even though it did happen to just slightly close above it. The point being here is there was lots of nasty action and lots of nasty reversals today. And then lastly, I mentioned we sold PDVC. Nothing necessarily wrong with this either. We're reducing risk in the face of extremely poor market action. The reason here is this is at the very top of the range, taking a small gain on this one here. So moving forward, there's very few positives today, but plenty of negatives. So the positives are Oxy, up about 1%. Northrop Grumman, also up about 1%, as you can see here, slightly under 1% if I'm not mistaken, 0.88. And then Twitter, which really doesn't even count because it's a buyout candidate, but it was slightly green today. So that's the only good things. Now moving back to Grotection here, I also mentioned we sold DIA. I know we just looked at it, but I just want to highlight what we were looking at here on DIA. Like we said, back above the 8, the 21, the 50, but just a nasty move down. And so when I say it's okay to be wrong, it's not okay to stay wrong. This is what we're talking about. We tried some longs yesterday after being in cash for the better part of the last week and a half or two because this was very poor action. You get a strong update yesterday across the board on all indices and pretty much all sectors. So we're starting to ease our way in. We bought names like Apple, Mosaic. We had some exposure to the Dow. But today what we were watching was, would there be buyers come in since the markets were opening up down a little bit? And the answer to that question was buyers were nowhere to be found. There was support was not acting like support. Levels of support were just getting sliced through and sliced through and sliced through. And so that led us to believe that, okay, this is a pretty serious down day. This is not digestion after a strong move up. This was poor price action. And so we cut the cord and ultimately ended up putting a short on. So moving along here, we're going to look at some more names that had a really rough day, and you can pretty much throw a dart. But Tesla, another name that was starting to look promising, closed slightly above the 21, above the 50, got back above the 80 MA, but down 8.5% today, back below the 200. Not a good looking chart here. You can see basically rejected at that declining 21, which is now about to cross through the 50 as well. So the point again, things that look like maybe they were possibly showing some signs of life, really taking it on the chin. Tesla, one of those names that was hanging in there, trying to still hold on to a relatively constructive chart, just like Apple, but shut down today. Bad price action, bad breaks of key support there on Tesla. Amazon, another name that had a really nasty move already and continuing that, as you can see here, this little H pattern, as we call it, playing out. So that's a gap down, an attempt to come back up that really failed, down about 8% today as well. This is a big stock, as you can see, over $1 trillion in market cap, but that doesn't stop it from having this bad day, even though it's extremely extended to the downside. So like I said, not really anywhere to hide. Facebook, one that had recently gapped up, was holding up pretty well, down about 7% today. As you can see, just very bad action across the board. Lulu, a clothing retailer, one that had a big gap up here, was starting to look okay, down 6% today, was down about 7 or 8% at the lows here. Net, one of the former market leaders, which is now down, I don't know, 60, 70% from the highs here. Looks like it reported earnings and it was not well received after the close, down 15% today. This is what I meant by the high beta growth really having a bad day. CrowdStrike, another one that had looked like it was possibly starting to show signs of improvement, down 10% today. And it's also worth noting that it was down 10% yesterday before the Fed, but ultimately ended up finishing green. So this is just absurdly volatile and terrible price action here on CrowdStrike, along with other names. Moving along here, and I'll try and go through these quickly, but the point I want to make is all sectors, doesn't matter if you're in a name like Costco, down 5% today, down more than the S&P. As you can see, this is a nasty candle for a stock that's supposed to be more stable. I mean, even here, you can see at the start of this reversal, Costco has gone from 610 to 515 in a matter of about 2.5 weeks. That's a big move for Costco. That's supposed to be a more stable, staple type of stock. United Airlines, a name that was holding up pretty well, was holding this 50 level well for the first time in a long time, down 6% today, back below that 50 level. Range Resources, an oil and gas stock that looked like it had a nice setup going, down about 4.5% today. A very wide range, was down 8% at the lows. Lots of oil stocks that looked good coming into today ended up being down 3, 4, 5, 6% today as the day wore on. A good bit of those finishing off the lows, however. Land, a REIT, as you can see, real estate having a tough go of it the last couple of days. We talked about that on Monday with the defensive sectors cracking. Here's a REIT down 5% today, as well as XLRE down about 2.5 or 3% today. Airbnb recently reported earnings, had a good day yesterday, as you can see. Thought maybe okay, some decent momentum, huge volume on this up day. Down 9% today following those earnings and breaking its recent low as well. Couple more here and then we will be done. Berkshire Hathaway also having a pretty rough day. Did finish off the lows a little bit, but down about 2.5%. You don't see Berkshire have a ton of 2.5% down days, so worth noting, but this continues to be in a downtrend as well after just not too long ago looking like one of the strongest stocks in the market. So the point I'm also making, not only were all sectors hit and lots of stocks hit hard today, but we're starting to see more sectors and more stocks go into downtrends. Names like Berkshire or real estate type of names or utilities or staples that looked good up until about 3 or 4 weeks ago, now clearly in downtrends. As you can see, Berkshire getting rejected at that 8 EMA. And sector-wise here, we'll go through some of the worst of the day. XLY really getting dragged by Amazon, as you can see, breaking its February lows here, making new lows for the year on XLY. XLK also having a tough go of it today. Not quite making new lows, but about as close as you can possibly get. You can see this 140 level seems to be the last line in the sand before it possibly continues lower. And lastly, XME, a lot of the steel name like Nucor down about 8 or 9% today. XME was down about 7 and 7.5% at the lows. Again, this is one of those areas where it was one of the strongest areas in the market, has had a brutally nasty pullback and further horrible price action today. So moral of the story, nowhere to hide on a day like today. It doesn't matter what you own. If you're invested in the market today, you felt the pain. Doesn't matter if you own staple stocks, utilities, and just real estate, you're still hurting on a day like today because it was massive distribution. And we're also seeing names like Apple, who have held up really well, have those kind of wild volatility, crazy distribution days. Apple down almost 7% on the day. That's something you don't see very often at all, and back below that 200-day moving average like we talked about on Monday, which is a pretty important thing. Apple hasn't lived below that 200-day and since the COVID crash. So something to pay attention to for sure. And then like we said at the beginning of the video, it's okay to be wrong, not okay to stay wrong. And all that means is it's okay to admit that, okay, I'm wrong. The market is not acting like I thought it would. It's not, our thesis is not playing out. Let's cut the cord, let's raise cash, or vice versa. So anyways, guys, I hope that was valuable. I hope you enjoyed it. Hope you enjoyed the content. I felt like I covered a lot of tickers and a lot of what we did here at Grotection. So like I said, we did enter a short position today and pretty much cut all our long equity positions with the exception of our our inflation protected bond ETF. So pretty defensive positioning for Grotection right now, self-explanatory with the way that the stocks and the market is behaving. So thank you guys for listening. I will see you on the podcast this weekend and then on next Monday's video. I hope you all have a great weekend.